Well, Mike Jones is the Riverfront Investment Group Chairman and Chief Investment Officer. He joins us live from Richmond, Virginia this morning. Mike, you say best case for the markets is if we get a surprise takeover of the Senate by Republicans as well. Short of that, what are you planning for?
Well, I think the market has well anticipated that the Republicans take the House, the Senate stays in the Democratic hands, and if that occurs, it's probably a classic sell the news kind of outcome where, you know, you've rallied in anticipation of that, market's very overbought, you get a pullback because, as your prior guest said, ultimately gridlock is not good for the markets. It was great in the 90s when policy was good and the economy was in a positive direction. Right. Now that we've got a lot of problems that need to be addressed, the market ultimately can't celebrate further indecision out of Washington.
Well, talk to me also about, and your point about the economy and context is well taken here. Talk to me about the complexion of the Republican Party and what that means. I mean, the Tea Party has provided some momentum, some excitement. What does that mean in terms of control of the House?
This may mean, well, let's dare to speculate that the market gets surprised and the Republicans take over both the House and the Senate. I think the market initially rallies on that news, but then the very next day or on Wednesday when we get the Fed announcement, there may be some muting of that rally because, as you noted, you can only attribute a Republican takeover of Congress to the energy and the focus that has come out of the Tea Partiers. And those folks believe that quantitative easing is just another way to finance ever higher government spending. So if I'm the Federal Reserve, I know the Fed is supposed to be above such crass political concerns, but if I'm Ben Bernanke and Rand Paul and Ron Paul are going to be newly empowered, I know that there's going to be hostile Fed legislation proposed in the new Congress, and I'm more likely to go with an incremental, cautious quantitative easing policy rather than a big shock and awe that the market's hoping for.
Now, I mean, as you kind of point out there, the Fed is apolitical, but you're saying that the backdrop will almost up the ante in terms of the level of QE that's needed?
I believe that the pressure on Ben Bernanke, the knowledge, I mean, remember how narrowly they escaped some of the hostile Fed legislation in the last Congress, you know, the audit proposals and things like that. A new Congress gives new impetus to some of these initiatives, and in essence, a $500 billion quantitative easing program is kind of a poke in the eye to some of these new Tea Party Senate candidates. Doesn't
Ben already know what he's going to do? I mean, he's listening to opinion today, making the decision tomorrow, but isn't most of this baked in, and hasn't he really already made up his mind?
You know what? That's a great question, and I'd love to be a fly on the wall today at the Federal Reserve and find out just how much has already been decided. My sense, though, is in reading the minutes for many, many, many years, is that these are just a bunch of guys coming together and women trying to do the best that they can in making a judgment under difficult circumstances. And in many instances, it goes right to the wire in terms of making decisions.
All right, so follow through your thesis of what happens on the QE front. In a global context, what does that mean to responsive policies out of China and the like?
Well, here is where I think that whether there's a Republican takeover of Congress or not, there's really room for cooperation and breaking beyond gridlock. Because one of the big problems with prior QE and any new QE initiatives is that every dollar that we print is matched by China. So when the dollar comes, when we flood the market with liquidity through our dollar printing, right, there's an offsetting deflationary impact because as the dollar falls, the yuan falls as well. Now, you look at Brazil, Korea, the competitive pressure that the falling yuan places on them is putting them under tremendous deflationary competitive pressure. They're screaming about the dollar not because they care about competing against the U.S., but because they care about the yuan. So I think a new Congress working with the president can be more effective, hopefully, in getting China to be more responsible and stop exporting deflation into the global economy.
All right, Mike. Well, by tomorrow, these hypotheticals will be resolved in some way. So thanks for giving us your perspective today.